U.S. stocks closed higher on Friday to end the second quarter and the first half of the year. The Dow on Friday rose 0.8%, the S&P 500 gained 1.2%, and the Nasdaq climbed nearly 1.5%. For the January to June period, the tech-heavy Nasdaq finished up more than 31%, its biggest gain in the first half of the year in 40 years, as inflation showed signs of cooling. A Commerce Department report out Friday tracking a key inflation measure closely watched by the Federal Reserve showed price increases grew at a slower pace in May versus April and are now below 4%. The data fueled hopes the Fed could be near the end of its rate hiking cycle. But Retirement Planning of America founder and CEO Ken Moraif says he thinks the Fed has a way to go before it finishes raising rates this year, which will cause turbulence in the markets.
We see the CPI continuing to bottoming out here in July at under 3.5%, but then starting to trend back up towards 4%. Then that bodes for the Fed raising interest rates more than 2 times in the balance of this year. And it also bodes for the Fed not lowering interest rates until next year. That being the case, the bond market hasn't priced that in. We don't think the stock market has. And that's going to cause the turbulence that I'm talking about, and why we think that there's going to be buying opportunities along the way when we get that turbulence.
In terms of individual stocks, Nike fell close to 3% after it forecast first quarter revenue below Wall Street expectations. Shares of Carnival, which notched their best month and quarter on record, jumped nearly 10% on Friday after Jefferies upgraded the cruise operator's stock to buy from hold. And shares of Apple jumped more than 2% as the iPhone maker returned to a $3 trillion market valuation.